Welcome everyone to the ABG Collier Investor Days. My name is Rickard Anderkrans. I'm a healthcare analyst at ABG. I would like to welcome Surgical Science here to present, and we have Gisli Hennemark, the CEO, and Anna Ahlberg, the CFO, here today. And I will host a short Q&A session afterwards. So the stage is yours. Very welcome.
Thank you. Welcome. Nice to see you all. Just before I get started with a short presentation of Surgical Science, can I have a quick gallop of how many has seen a presentation of Surgical Science before? Just raise your hands. All right, good. Then I know approximately what we have to deal with. Surgical Science. I guess all of you step on a plane from time to time. When you do so, you don't really have to think. You know that the pilot has been trained in a simulator. You know that the pilot has been certified in a safe simulated environment. However, if you're unfortunate enough to be rolled into a OR to have a surgical procedure, you don't really know exactly how the technical skills of the surgeon is. So that's our vision at Surgical Science, that everyone going into the OR should know that the surgeon has been trained and objectively certified in a safe simulated environment. And this is what we've been doing for 20 years. So Surgical Science is a company that's been around for 20 years. Primarily, we've been a research company for a long time, building our solutions in order to supply surgeons with simulators so they can train before they work on patients. And if you look at the surgeon here on the picture to your right, you can see when doing laparoscopy how you're standing and you have an inflated abdomen if you're working in the abdominal area, and you're looking up to a screen where you have to rescale what you do with your hands in a volume, in a three-dimensional space, to what you see on the 2D screen. And this is technically very difficult because your movements is different with your hands to what you see on the screen. You have to recalculate that. And just to give you an idea of what this actually looks like in real life, I have a short video here that we got from a client of ours. I don't know if you have a lot of physicians in the crowd here, but this is an ectopic pregnancy. It's a very standardized laparoscopic procedure that you do from time to time, gynecology. And you see this gray area, that's something that's been cauterized in order for it not to bleed. And to go in with a scissor is something that should take about 4 seconds. And they're already been at it here for 15, 20 seconds. Because it's very hard for this young surgeon trying to get the scissors to the right space to find its right space. And this is why you need to train. And you can train this in a simulated environment. It soon ends here with blood and you know, yeah. So I'm just gonna jump forward here. The business of Surgical Science since 2016, when we revised our strategy, is that we work with our own products, educational products. Those are simulators that we produce with our own brand name, both hardware and software, to surgeons in training. So the primary target group, the primary customers here, are the university hospitals that have surgeons that are yet in training. And to get them to work with simulators before they go into the OR and work on real patients. So basically about cutting away the early learning curve and moving that to a simulated environment instead of patients. It's good for patient safety, number one, but actually number two, the time in the OR is extremely expensive. So to use OR time for education is not a good return on investment. So you also save money. But then the other area, that's the fastest growing area for Surgical Science, is that we work with industry OEM, we call it industry OEM, basically med device companies that have real medical devices where we can implement our simulation technology, primarily software. So it's a little bit of an Intel Inside kind of strategy. Get our software into medical devices where simulation plays a big role. And we do that often as a white label. We are a component of a bigger solution. And these two areas actually really feed off one another, because we can use the same IP, that's our own core asset, our own software technology, primarily software, some hardware technology, and we can use the same developers, the same development organization. And it's a lot of knowledge flowing back and forth between academia, where we get access to key opinion leaders that are often very interested in patient safety, and the industry, who wants access to those key opinion leaders. And those key opinion leaders also want to know what's the latest that's coming out in technology, in med devices. So those are the two business areas we work with. And just a quick glimpse of what does our educational products look like. Those simulators that we help young surgeons train on before they go and work on patients. And here you see our product portfolio. And all of these products have been designed by Surgical Science, but we have external suppliers that do the actual manufacturing. These products are not medical devices in a regulatory aspect. So it's not something that you need regulatory approval for. These are educational products. Our largest selling simulator is the one to the left, called LapSim. That's a laparoscopic simulator. So exactly for what we looked at here in the beginning of the presentation, when you do keyhole surgery. Then we also work on endoscopy. So that's when you do an upper GI, you look at your stomach. The same thing, you basically move a tube. It's technically difficult. And also colonoscopy, when you do it from down below, it's difficult to find and be able to look at all parts of the colon. But you can train that in a safe simulated way and get objective feedback, so you know if you're doing good or not. The products are, when you look at them, I mean the simulators, you can feel them, you can see them, you can touch them, but the big asset of Surgical Science is the software. That's where we make a lot of the investments. So we keep on developing new procedural modules, new different procedures that you can work with on the simulators and get better at on the simulators. Today, we're basically from lungs, the VATS lobectomy, down to gynecology. So we work with everything except arms, legs, and head, basically. That's what we work with. And again, to give you a quick glimpse of what this can look at, imagine that you're standing here, you're holding on to your instruments, you're looking at the screen exactly as the surgeon do, but on the screen, you have a real-time, non-linear simulation. So here you can actually try and do a procedure and get feedback on how well you have technically performed it. Again, I don't know, are there any doctors in the crowd? Yep, here's a doctor. Do you see what this is?
Seems to be a gallbladder.
It's a gallbladder, yes. So this is a cholecystectomy. It's a very common procedure, the surgical removal of the gallbladder. So here you have the liver in the behind, and this is the really the core asset and was taking a long time to develop. The realistic movement of the organ and the instrument, the interaction between the two, that's in a way that mimics real life. And in your hands, you will actually get also haptic feedback. So if you touch this in here on the liver, you will have you will feel it in your hands. This is something that's really difficult to develop. I mean, this is not done with any Unity software or any third-party products. I mean, this is hardcore C++ programming, where we have built our own graphical engine in order to do these, and the physics engine in order to do these simulations. Moving on into this other business area that I talked about, that we call Industry OEM, where we find licensing opportunities within the medical device industry. It has a lot of different segments, but the most important segment, and that's really growing for us, is surgical robotics. And surgical robotics is not a robot that operates by itself, but it's a console where the surgeon sits in a console and is moving surgical arms that sits on a robot. And this is good because technically you get an extra degree of freedom, so you can move the instruments in a wristed way, but you also get more precision. And surgical robotics has really been growing in the last few years. Initially, it was a lot of urology. So if you were a man and unfortunate enough to get prostate cancer, you would Google immediately and you will realize that, okay, number one is about survival, but number two is about quality of life after the operation. And then robotics has a significant advantage that it doesn't damage the nerve cells so much. And this market has really grown. And here simulation plays a key role. Because in order to roll out this new technology, you need surgeons to be comfortable with the technology and be able to perform it in a patient-safe way. And a lot of these companies, they rely on the consumables to earn money. So they want as many of the surgeons as possible trained. The number one company in this area, Intuitive Surgical, has shown some data of how the procedural growth has been in this area. And there you can really see the growth. Initially a lot of urology, whereas now it's a lot of general surgery. So they use surgical robotics in all different areas. When Medtronic, major big medtech company, rolled out their robot in September this year and showed it for the first time, they showed very interesting statistics that today only 2% of the procedures that you can perform with robotic surgery are being done with robotic surgery. So there's still a lot of growth in this area. And if you look then at surgical science and what we do, here are some of our customers in this field. We're working with some of the challengers to Intuitive Surgical. And on this picture here, you see one of those robotic platforms, the console. But in the back of the console here is a computer that's running software that the surgeon here is trying and being convinced about the robot, running this software that's called RevoSim, because the product is called the Revo. It's from Mir company in South Korea. But inside here, 100% of the software is surgical science. So this is a perfect example of how we incorporate our software directly on the med devices around with our customers. Of course, robotics is the most important customer segment for industry OEM, but also within traditional laparoscopy, so normal keyhole surgery, everything is becoming more and more digital. And that's really key for us. I mean, the mega trend of digitalisation, because it makes it much easier to directly implement simulation. So here's an example of a customer. You see our simulator here, LapSim, but this new med device, it's called a LigaSure, has a lot of buttons, and actually the new instruments that are coming out already have microprocessors. So it's already digital, which makes it perfect to adapt directly to simulation. So you can use it when you market your instruments, when you try new instruments in the R&D process before you have put in too much money, when you convince regulatory bodies, not at least FDA, that's becoming more and more strict. that you as a supplier have to show that you have a patient safe way of rolling out your products. Along this strategy of working more with industry OEM customers, Surgical Science did an acquisition in the end of June of a company that's extremely focused on working only with industry OEM customers and only software. This is a company called Sense Graphics. They have Intuitive Surgical as their main customer, so the incumbent robotic company. And as you can see, a very profitable company, because this business of software embedded in med devices scales at a much faster, basically, than educational products do. But combined, these companies become very strong together, and it's also a company that had a lot of software developers. So it was a company run by two fantastic entrepreneurs that are still with our company and still keep on working together with us. But they had basically hit the ceiling as a company. They needed to structure their business in a very different way. And that had already been taking place at Surgical Science, because we'd already built processes and structure and basically platform for growth. And this acquisition, we have some just short figures on that acquisition. I'll let Anna, who's the CFO, run you through that.
This is what the deal structure looked like when we bought Sense Graphics. We paid 300 million cash and debt free for the company. That was divided 60% cash and 40% new shares in Surgical Science. And for the cash part, we did a new share issue amounting to 200 million Swedish crowns. We are very happy with the new owners that we got when we did this new share issue. We now have owners such as AP2, AP4, Handelsbanken Fonder participated, as well as Humle Kapitalförvaltning, TIN Fonder, and some other large Swedish institutions. And we consolidate Sense Graphics as of July 1st. So we will look at some numbers in a short while.
Just quickly, before I let Anna run us through a little bit on the numbers of how we look like as a company in the last quarterly report. Because of the acquisition, the business became significantly larger. So we just now, with the Q3 report, we communicated new financial goals. So in 5 years' time, our financial goal is that the company should have a total turnover of 400 million Swedish crowns. And that may include some complementary acquisitions. Our educational products, our core, where we have our own IP, should grow on average during this 5-year period of 15%. Industry OEM, which will have a larger growth, but a bit more uneven, because it depends on when our customers launch new products. With a 400 million turnover, EBITDA of at least 40% is our profitability target. And Anna can comment on what it looked like here in Q3 just recently. We also set a dividend policy, updated that, so on a 1 to 3 year horizon, we don't expect to do any dividends, but on a 3 to 5 year horizon, 30% of our net profit after tax should be going back to the shareholders.
Okay, a quick glance then at the numbers for the third quarter, which was then the first quarter that we have Sense Graphics in the figures. We had sales of just above 32 million Swedish crowns. That was an increase of 136% compared to the same period last year, when Sense Graphics was not included. If we compare apples and apples, we still had an increase of 35% in the third quarter. And if we look at the two business areas, for this quarter, sales for industry OEM was just above 19%, and sales for educational products was just above 13%. So industry OEM was larger than than sales of educational products. That can, of course, vary between the quarters. We have different seasonal effects where educational products often have a very strong fourth quarter due to the fact that the university hospitals, etc., the customers often have that budget year, and they often wait until the end of the year to do their final investments. Industry OEM also has some seasonal effects, but not that strong. More over a longer period of time that Gisli talked about, that it can be more uneven over time, depending on where we are in different projects. For the full period, January through September, we had sales of just above 62 million. That was an increase of 57%. And if we then again look at comparable units, that was an increase of 19%. A lot of figures, small figures here, but if we focus on the third quarter, we had a gross margin of almost 87%. We have been before at around 75% and have also always explained that when we have a larger portion of license fees in sales, the gross margin will increase. And that's what we see here now for the third quarter, with more sales within industry, more license fees, the gross margin goes up. Marketing and sales, approximately 30% of sales, also affected a bit by the acquisition, where we now have some extra amortizations due to the acquisition. And in the administrative costs for the quarter, we had approximately 1.5 million. That was because of the acquisition, one-off costs because of the acquisition. So we had an EBIT for the third quarter of 9.5 million and net result of 10 million. And as Gisli mentioned, our goal for the EBITDA margin is now 40%. For the third quarter, we had 43.5%, so we were above that goal. That can, of course, also vary between the quarters. We capitalized some of our expenditures, but not as much as we depreciate. We have a very good, we have no interest-bearing debts in the company, strong cash flow. We did that new share issue during the third quarter that I mentioned, and at the end of the third quarter, we had cash of just below 70 million Swedish crowns. Just a very quick look at the shareholder structure. We have two larger shareholders that have been with the company for 15 years. They were diluted now with the new share issue, but other than that, they have really kept their shares throughout these years. And then Landsnora Software, those are the sellers of Sensgraphics that now hold 10% in the joint company. Swedbank Robur is also one of our largest shareholders. They have been with us since the listing of the company 2.5 years ago. And then we have these new shareholders that came in with the new share issue. Okay, I think we're running short of time, so we'll stop there.
Thank you all. So I will be just going through some quick questions. Could you just describe the revenue model a bit closer in terms of licenses and sort of system sales, and just so we can get a greater understanding of how your revenue streams actually, you mentioned a bit of a lumpiness in the OEM segment and some license fees, but could you just give us an overview of the new entity, how we should think about that?
Yeah, and it's quite different between the two business areas. Educational products, that's more one-off, the hardware and the software. You can add the new software modules, and you can have upgrade and support as well. But it's most of the revenue comes when you buy that simulator. And then within Industry OEM, we have the first part of the project where we have consultancy fees when we do the adaptation of the software to the customer's platform, if it's a robotic platform or some other platform. Then you have the license fees, but they come then when they start to sell. So in between, you might have a period when they do their regulatory approval processes, etc., when we don't really have the revenue. So consultancy fees, then you have a period, and then you have the license fees. And when the license fees come, that's we get a license fee for each robot, for example, that is sold.
So, looking at the coming next 12 months, what should we look out for as investors? What's going on with the new entity structure that's been put together this in the end of the summer?
I think that what you should keep an eye on is the long game. I mean, it's the long term, and the most important things are the digitalisation of healthcare, the increased focus on patient safety, and the transition from open surgery to minimum invasive surgery, both laparoscopic and robotic assisted. And if you have those three mega trends in mind, that all are very good for our company, you will keep on seeing how Medtronic have launched a new robot, how the joint venture between Johnson & Johnson and Google, which is called Verb Surgical, is investing heavily in this area for also surgical robotics. How CMR Surgical, that's a client of ours, had the largest capital raise in Europe ever for a privately held medtech company. I mean, keep the mega trends in mind, and then look for the events that happen along those lines. That's what I would say.
Perfect. And just a really quick final question: if you could describe the competitive landscape and your position in that in the competitive space at the moment.
Yeah, we have some competitors, but very few, because this is remember, this is a niche market. It takes a very long time to develop the asset, I mean the software, and for the med device companies, it's still a smaller part of the cost of their product. So it's actually, in my mind, a real sweet spot. So it's us, Surgical Science. It's a company that's called Symbionics. It's an Israeli company that started roughly at the same time when we started. They are now part of 3D Systems. They were acquired, so they're part of a 3D printing company. And there's a company called CAE. That's CAE Healthcare. That's part of a flight simulation company, but that also do medical simulation. But I say it's primarily those three companies in this space. So it's basically a global niche market. So not a lot of competitors, but a few.
Perfect. Thank you very much.
Yeah.
And thank you all for listening. We'll
You're
cut it
welcome.
short there in the interest of time. Thank you.
Thanks.